Hey, everybody. Happy Wednesday. Thanks for checking in our latest TDR Trade to Black podcast. What'd you guys all think of that news from 48 hours ago? Lots to take in and process, and what is next for this cannabis industry regarding cannabis reform. Today's podcast, we're going to welcome in Seth Yakatan back to the podcast, talk about some specific states like Minnesota that actually get overlooked sometimes, and Pennsylvania. Yes, we know this is a big state, but we're going to share some really interesting data that actually provides who the leading companies are and what are the main reasons why it's so fixated for a lot of these companies that focus on Pennsylvania. It's really to learn more about why this could actually build the cannabis industry to that next level. As much as I'm here, I'm actually out in Vegas right now. This is a pre-record. So leave some comments as usual. Let's welcome in AV here on a Wednesday. Good to see you. How are things?
How's it going? Good. It's good.
Got a new setup. You're moving around, I see.
I am. That's what children fundamentally change your life. So I had to move my office.
Oh, are you about to learn that? That's for sure. But I hope all is well with the family right now, as little one's going to be on the way soon. But congratulations again. But we're going to dive into obviously the stuff with Seth in just a moment. But as much as people are watching this right now, just a quick reminder: this is not a live stream. This is a pre-record. We're in Vegas right now. We'll be providing updates throughout the week as to what we're here. And we're going to be meeting with the best thought leaders in the space. So lots of stuff going on. Anything that we're going to be hearing as far as trends, rumors, that sort of stuff, we'll make sure to share this information to everybody. So make sure to check us out on our Twitter handle, as we'll be updating that all week. But in the meantime, it's Wednesday, so let's welcome in Cannabis Capital Markets Advisor Seth Yakatan back to the show. Good to see you. Peace. The man
Happy
with
to
the
be
beat.
here. Thank you. Yep, happy to be here.
How have you been? Good week?
I've been excellent. Thankful for breathing oxygen and being on the Dale's Report Trade to Black, man.
Nothing better than that, huh, buddy?
Nothing. I got to get myself that one of those hoodies so I can just show up and be part of the squad.
Well, by the time we actually see each other, because when we record this, we'll see each other later this week. But in Vegas, I'll make sure to drop off a hoodie for you. Does that sound good?
Can't wait. Yeah, I'll bring you a bracelet.
All right. So listen, we wanted, I think a lot of this segment, I think the biggest takeaway that a lot of people want to learn is the access of information and data that you have. And I think it's important to share some of the stuff that the average viewer and investor may not know, but then also providing some of your takeaways and you and Anthony going back and forth. I think that's the biggest value that I think people will find based off of that. And with that, as I said off the top, I want to talk about what's going on in Pennsylvania right now. Minnesota, a state that I think a lot of people overlook. We'll give some examples of some bad stories in this space right now. Weedmaps comes to mind. And then we're looking at the private side. You think this is going to be the year of mergers and acquisitions and consolidations where large private operators are going to start buying out some very well-known private brands. So love to get your take on that as we dive into this. But first off, let's start with Pennsylvania. We all know this is a big state for a lot of companies. Trulieve, 21 stores, GTI 18, Verano 17, Curaleaf 18, Air Wellness 9, Ascend 5, Terracin 6. Like, this is a big state. We know that right now. But when you look overall, this is 148 stores. That's 14 stores for every million people. What's the average spend per person currently going on in Pennsylvania right now, Seth?
It's about $130 a ticket, which is huge.
Right.
It's healthy.
It's absolutely huge. Very healthy. And, for 2024, it's about a $1.7 billion market. And the market functions really well. When you look at markets that function well, like in Arizona or a Missouri or a Illinois or an Ohio, it's, usually largely 70-30, 80-20 MSO single store or, kind of single state operator focused. And that's what the split is in Pennsylvania. I think that you have a huge medical patient base with 440,000 active certifications there. That's as big as the country of Australia in terms of medical patients registered,
Yeah.
right? You have a good group of single state operators with a 35 store, kind of network. And I think that you have a bunch of stores. You have a bunch of stores there that average, your average store is $9.2 million a year, which is a giant number. If you have a store anywhere that's approaching, $800,000 to $1 million a month, that's a big number. So further, I think for me, the lens has focused on Pennsylvania because of the lack of the popular vote ballot measure
Yes.
not passing in Florida. So, remember 2-3 weeks ago, you had a couple of stocks, including Trulieve and AYR, that were focused on Florida adult use. Well, that fell off the map. So now you have a big cluster of MSOs, including 2 or 3 that we talk about a lot in AYR and Trulieve, that are all in on Pennsylvania. Like if this legislative vote to go from adult use to go to adult use in Pennsylvania doesn't work, AYR doesn't have a story. I don't know what Trulieve's going to do, right? If you're GTI or you're Cresco, you're not unilaterally focused on Pennsylvania, but Pennsylvania is the next catalyst state for a lot of these folks.
Yeah,
And
it is.
if it doesn't go to rec, I think it's going to be tough for some of these people. So for me, it's an interesting place to watch from that perspective, and because of the lack of adult use passing in Florida, it's been the next focus state for me.
Yeah, it has. Absolutely. Anthony, when we look at this, we all know the news that happened towards Amendment 3 back in November. As Seth said, this is a legislator vote, not a ballot initiative. Like, are there pros and cons? Like, is it, we can look at everything in hindsight, looking back at it now, that yes, it didn't pass in Florida. But when we look at this as a legislator vote, can't even pronounce it, legislator vote versus a ballot initiative, is that a good thing? Like, is it more favorable for adult use to pass versus, say, trying to meet, let's say, a 60% threshold, which is a big number to achieve?
So there's nuance there. It's better than what we had to accomplish in Florida with that high hurdle of 60%. I would say it's not better than what they had to do in Ohio. That was a 50% threshold,
Right.
which was much easier to get past. We're seeing the Street Laughlin bill, Bill 2500. There is conversation going at the state level of government in Pennsylvania as it relates to getting something done. This obviously is the largest adult use conversion market on the docket, potentially for 2025. It's also a highly penetrated medical market, as Seth alluded to. It's almost hitting a $2 billion annualized run rate, so it's healthy. It's going to be all eyes on Pennsylvania for probably Q1 and Q2 of next year, to if this market is actually going to flip from adult use perspective. It's a lot of the air story. There's a lot of MSO operators that are there. This is potential growth for them.
Yeah.
Well, it's binary, right? If this happens, air gets some air, right? And Trulieve has something to talk about other than the fact that Kim lit $140 million on fire, which no one other than me wants to talk about. And I think we talked privately that we all kind of think Verano is undervalued, and you get a pop here. I think they're going, I know the person who's in charge of their national cultivation program. They're growing pretty good product. I would say they're growing fire.
So who's performing best? Who's performing best in the state right now?
That I don't know. I don't have enough granularity of data to tell me who is performing best.
You don't break it
I'm
down.
almost positive. I'm almost positive Cresco is number one.
Yeah.
In Pennsylvania, as per the Q3 print from Cresco. I think they maintain their number one market share in Illinois and PA. I could be wrong, but I'm pretty sure.
You're probably correct. There's a private operator also there that we haven't talked about called Ethos Cannabis that has 8 stores that does a great job. That I spoke to Gibran Washington, who's the CEO there last week or two ago. Amazing story, amazing company there as well. So you have 1 or 2, decent smaller guys that are getting it done as well.
Well, it's a state that definitely. Have you heard anything lately from your network, Anthony, on how that's progressing from the political front?
Nope, none since the last time I spoke to them about a week and a half ago. No, it's a Q1 2025 story. Things are progressing through the state government. I know that I had mentioned that there was a flipping from Democrat to Republican majority in one of those houses of government, but from what I've heard, that's not going to be any sort of friction on the process.
Go ahead.
I was just going to say, you have one more trigger there, which I think I keep an eye on, is that the rules have been written such that there's some level of controlled around cultivation licenses, which probably favors bigger operators, but also favors market stability in pricing. So the other thing which I kind of gauge and look at is if you're going to have a catalyst state, what happens with cultivation? Because usually you have this period where you have a lot of excess supply, and then as more licenses come online, you don't. I think Pennsylvania has kind of set it up right from that perspective, almost like in Illinois, it favors the bigger guys. But I think, another reason why I think this is such an interesting place is because if you get rec, you also have some level of 2 to 3 year built-in semi-stability in wholesale pricing for flower, which also comes in to sometimes, wipe markets out after a year,
Yeah.
like you saw in Michigan. And I don't think you have that setting up in Pennsylvania. So it's a very important place for cannabis right now.
Do you guys think that if, look, these are completely separate states, but a question needs to be asked, I think investors would like to know, but do you think it would have any effect if Pennsylvania did a pass adult use that would have any kind of pressure or impact on Florida to eventually get this right sooner rather than later? None, huh?
There's nothing budging the state of Florida.
Yeah, I hear you.
There's nothing there's nothing unless that they can get it done legislatively, which I do firmly believe that DeSantis does not want adult use cannabis in the state of Florida under his watch. It's for reasons that I obviously vehemently do not agree with. But there's nothing that's going to reduce the amount of friction from the governor's office as it relates to adult use in the state of Florida. It's definitely not going to be PA converting.
You guys have asked me to come on for my capital markets commentary. When it comes to political prognostication, it's probably a better guest to have than me. Okay.
Yeah.
It's all good.
By the way,
friend.
Cresco are number one, and Cresco are number one in PA. Yeah.
All right, let's keep it on the what we want to talk about here. Let's now switch to Minnesota. And you think, Seth, this is actually going to be a great state. We've seen actually a lot of states and their rollouts to be anything but perfect, and New York obviously comes to mind. But you feel Minnesota's actually rollout could be actually even worse. So one side of your mouth, you're saying this is a great state, but the rollout has been really bad. So you want to explain a little bit more what you mean by this?
Sure. So let's talk about why I think it's a great state. And then we can talk about how the government kind of messed it up. So Minnesota's on an island, right? So geographically, it's surrounded by Canada, North Dakota, South Dakota, Iowa, and Wisconsin, 4 states or 5 places where you're not going to get an influx of people. So you kind of have a captive audience there. It's economically, an amazing place. It's the 22nd most populous state in the United States. Minneapolis, St. Paul is the 16th largest, demographic market area by Nielsen. So you have a vibrant economy there. It's a real city. You have a culture there that goes out on the lake for 6 months a year and usually drinks and has a good time. So the embedded ethos of the state is we're going to have fun. Gummies came online there really early. I still think you can buy gummies in almost any convenience store if it's less than 5 milligrams. Hemp beverage and THC beverage have been ubiquitously sold in bars and liquor stores there since things came online. So, most of the people that I know that are in that space love that state. I think it's a natural catalyst state. You have 2 MSOs that are there now in GTI, and remind me who the second is. Anthony.
Oh, Virrell. GTI and Varrell. Yeah.
That are doing really, really, really well. And I think when we look at places where you have a good economy, you don't have border state worry, and you have an embedded, good population, Minnesota ticks all the boxes for me.
Yeah.
I'm just waiting for it to explode. And we talked last week about the smart guys. Bengal Capital have a pretty big position in Vireo. And I think, one of their operational partners went in to run that business. So it's kind of sets up as another one of those, okay, that's probably a stock that I'm going to buy and hold for a minute, even though it's kind of just smaller. What have they messed up? I think that New York has gone about probably the worst licensing and worst social equity rollout of any state that I've ever seen. I think Minnesota did it worse. So
that's hard.
And that's hard. So they opened up a licensing procedure for social equity applicants. They got about 1,800 people to apply. About 10 days ago, they basically invalidated 90% of the applications because they didn't meet specific criteria for being applicants. Then a week later, a judge ruled that they were going to shut down the lottery process for the remaining people. So, you have
So
18. So you have 1,800 people who spent a lot of time, money, energy, and effort to go and apply for a license, and now they're kind of moving the goalposts on it. It just looks like they're making it up as they go along and don't really know what they're doing. So
Yeah. So, I mean, Seth, you've got experience in capital markets, some in venture, and I mean, you know the cannabis space. Why don't these states, from an execution standpoint and an implementation standpoint, nurture these social equity applicants? Like, give them the tools to succeed? Because it seems like they want a virtue signal, they want to create the programs that look great on paper. But once any of this stuff is actually put into practice, you just see it fall apart and fail. Like,
hmm,
there's no reason why the social equity program in Minnesota should have rejected that many applicants after they went through the process and burned capital that is more precious to them than any of these larger operators that are coming in from a well capitalized standpoint and going for these broader licenses. Like, why can't we get this social equity component right? It doesn't seem that difficult.
I don't know. I think the ethos behind it, which is I want to repatriate historical wrongs, is the right ethos. The
Yeah.
implementation of it kind of almost unilaterally has been poor. Also,
Yes.
one thing that most people other than me don't want to talk about, and this is three Caucasian males talking about social equity now, so let's just talk about that, is that what they really need to do is figure out a way to give some of these people some money
Correct.
because if I'm a social equity applicant and I win a lottery ticket
yeah,
for one dispensary in Minnesota and I'm up against GTI and Vireo,
You're fucked.
you're kind of fucked. Yeah,
Yeah.
you're kind of fucked. So I don't know
that's
why
putting it
they
mildly.
yeah, I don't know why they don't have a way to continuously get it right and why they continuously get it wrong. But if I just look at three states that I've looked at now deeply, California, you know, New York and Minnesota, there's, three examples of places where they've just gotten it wrong. I don't have a good example of where they've gotten it right. And it just drives me nuts because it makes the elected officials really look like they have no idea what they're doing. And
Correct.
it's just not a good look. And it sets back, the agenda for what we're trying to do as an industry every time it happens.
Correct.
Well, it's like that for a lot.
I've asked advocates that, and when we're arguing and just friendly arguments, but why is social equity not working? I go, well, point out to me a market, please, where social equity has worked, where the system has yielded the results that
Great
we
point.
have advertised and that you're seeing success. Because if I'm an MSO and if I'm in one of these, or even a sophisticated operator, and I'm in one of these markets that wants to get deep with, that wants to have a deep penetration from social equity, I'm going to let that play out, let all the assets just go belly up and become distressed, and then go cherry pick the assets that I want to acquire. And it's
Yeah,
going to be cheaper for me. And just let
yeah,
the competition die off because you nailed it. Like, if I'm a social equity applicant that has no experience and I'm just getting this license due to certain circumstances, how am I going to go compete with GTI that's going to come in like assassins with SOPs and capital on day one, and you're going to expect me to go compete with that guy for business?
yeah.
There's
It's
only
just,
two places
yeah,
where I've seen it work. One place in New York where you have a cap on the number of retail that you can work, where certain groups of social equity, what I would say, comrades have banded together to put together a footprint because of the rules
yeah,
that have worked. That's a game of the system, but it's certainly worked. There's a smaller gritty group out of Illinois called 1937, which I think has done a phenomenal job of leveraging true social equity with true social equity operators. And the
okay.
two guys who run that company, I think, have done an amazing job of making a difference in that state. But that's probably one of the few that I can point out where they've got it right.
Yeah, well, until we really understand why we're doing this and why it's not succeeding, a conversation needs to be had. But I've had conversations with even some executives when I was down in Florida at one time where there has been applicants that have been approved in specific states that were not even aware of a 280E tax code. Like that's just common sense. You've got
I
to
mean,
do your homework.
I think there's probably two things that legislators could do. Is one, I urge people, follow the models for states that have worked, right? If you look at like what's happened in Missouri or what's happened in Arizona from a legislative perspective, or kind of what might be happening in Minnesota, at least before the social equity, there's some in Pennsylvania, there's some models that kind of seem to work. So look to a model that works. And I think the best thing that you could do for some of these social equity applicants is put them in a position to win.
Yeah,
Put them in a
correct.
position to win, and they put all these people in a position to lose. And whether that's because the incentives aren't aligned, or whether that's because the politicians want a headline as opposed to a real outcome, I don't know.
All
They
But
comes
do.
down to votes. They just want
you
to
know,
keep their jobs and be reelected.
Which
That's
they
all it
that's
do.
comes
I mean, just
down.
look at what happened. Look what happened in New York. I mean, they attacked Chicago Atlantic for loaning money to the social equity applicants because it was recourse versus non-recourse. They went through the covenants and tried to attack the entity that was actually allocating capital for
Yeah.
them to get the
you
deals
also
done. I think it needs to be refined. It needs to be an accelerator.
you
Take the
also had
VC
a
accelerator nurture model.
you also had a story come out about New York where Chris Webber, I didn't call timeout, and the woman who ran that fund, got paid fees before they even deployed capital. So it's
Yeah.
like
Yes.
the rich get richer, right?
Yeah.
I don't know. I don't have an answer.
Yeah.
You remember that game, 1993?
I'm
Timeout
old
against.
enough to remember that game, and I'm going to tell you something. Never been on the Chris Webber bandwagon. I didn't call timeout though. I
I
didn't
tell you,
call timeout.
in that game, the referee missed. He traveled before he dribbled the ball down the court. It was a bad travel. That should have been the turnover, but
But
whatever.
but he didn't call timeout.
True. Good point. Okay, bring it all in before we jump into Weedmaps. Minnesota, then. You like the state. Do you see more MSOs getting involved in this state? There's two that are doing well, as you said before. Like, are you surprised, or is it, just a state that, like, we saw a lot of companies scale back the amount of states that they were operating in? But do you see a trend going into 2025 where you see more people and more companies starting to like learn more about this market?
Gosh, I would hope so, because when I look at the heat map and I look at, when I look at where there's white space, if I'm an MSO, there's white space in Utah and Minnesota. And if I'm inside the con of one of those, destroyers, I'm saying let's go where the white space is, because those are places where I can maintain a sustainable competitive advantage. Why they don't do that, I don't know, but I would. I would deploy capital in Minnesota, and I also think I would do the same thing in Utah.
Hmm.
But
A lot of
that's why I'm sitting in the cheap seats, and I am
Yeah.
not sitting inside the management team of one of the 10 MSOs. Now, when the 5 of them did change CEOs, I might have gotten a phone call, but I did not.
a lot of lakes in Minnesota. It's almost like the Ozarks of the North, is it not?
It is.
All right, let's move on to our third topic, which is Weedmaps. And like you described this as a bad story developing. Well, in a lot of ways, I think it's already developed. So for many people that are aware or not aware, this company had to pay the SEC millions of dollars. I think it was $1 million for misleading investors on false metrics. And then you start to scratch your head, like, how does one rebound? And then recently, their CEO and CFO recently stepped down. And it appears this was one time, I think a company that was the next big thing, Seth. But I think as we fast forward 4 years later, because I remember the Tyson Roy Jones Jr., that was a big pay-per-view event back in the COVID era of 2020. They were advertising anywhere. And there was a lot of people pretty excited and optimistic and thinking, like I said, the next big thing. But fast forward 4 years later, you might want to define what the next big thing actually means, because as you said, it looks like a story that's developing into a bad one here. So what can you share with us?
Well, let's go back to where it went. Lawsuit dropped, or was alleged, end of 2022 into 2023, that the CEO and the CFO used misleading user metrics to drive revenue. Company agreed to pay $1.5 million fine. CEO, who was Chris Beals, stepped down in November of 2022. CFO, who was Arden Lee, resigned in July 2022. Company pays a fine. You think it goes away? Well,
It's
end
not.
of end of October, class action lawsuit hits the SEC from shareholders that says not just did the CEO and CFO know, but a bunch of other people inside the tent knew. Middle of October, price drops below $1 a share. Remember, Weedmaps is listed on NASDAQ, and NASDAQ has a share price requirement to maintain a listing. So
Bingo.
when you start to see a couple of different cracks at the seam, and folks that are shareholders name Silver Spike and the SPAC in the class action lawsuit, it starts to get a little bit nasty, and it just doesn't really look like it's good. I mean, Doug Francis, who kind of put that thing together, and Scott Gordon, who was the CEO of Silver Spike at the time it went through the SPAC, were named in the class action lawsuit. And so when you start to see multiple cracks at the seam of something that you thought was fixed at the foundation, it starts to look spooky.
Yeah.
When you put it that way, like that's putting it mildly. So what's next? Do you think this company, if we're talking 12 months from now, where's this company?
I don't know. Weedmaps is a really interesting beast for me. The last time I looked at it, and I don't know where it's at today, but it was trading in the 40 to 45 times earnings space. Weedmaps is one of the most higher than that now. So Weedmaps is one of the excuse me. Weedmaps found a seam, right? Weedmaps is not going to say they're a plant touching company, but they're the closest thing to a plant touching company in the US that operates in the US that's listed on NASDAQ. And if you pull down, whale wisdom, 25 real investors own 44% of that company. Morgan Stanley owns about 6% of the company. Doug Francis, who founded it, owns 5% of the company, just under 5, 4.9. There's a reason for those of you who know that you're at 4.9 and not 5. Vanguard owns 4.6. BlackRock listed that they own 7% of the company. So when you start to look at the 13 Ds of this company, this ain't a cannabis. This does not have the cap stack of a normal cannabis company. This has an institutional Wall Street cap stack. So when you start to see institutional, real market investors, and the cheese is getting stinky, it ain't going to be good. Something's going to happen, and either these claims are going to be adjudicated and it's going to be, everything's fine, or somebody's going to go in here and clean house and restructure this thing, or it's going to go down. There's one of three options. We talked the last couple of weeks about Agrify. I believe that at this point, if I'm a hostile guy, I'm looking at Weedmaps as a shell. Right. And I'm going to 6 or 7 of these folks on Wall Street, and I'm saying, I'll buy you out at, a 50% discount. Let me take this thing over and use it as a holding pattern. I think it's expensive. If you look at where shells trade, you could buy a NASDAQ shell for somewhere between $5.5 and $10 million today. So it's an expensive way to play it. But boy, it's going to be interesting to see how this unfolds. And I think it has bad ramifications for us that are deep in the industry, because I don't think it's going to be a fun story.
Yeah. Who would you say is their direct competitor? Because they're a database that connects you with like local marijuana dispensaries across the country. Is Dutchie doing it right? Like, are we looking at that as a main competitor now? Like, where are we? Because like I said, this looked like it was going to be like the Google of the cannabis industry like 4 years ago.
I don't know that they have a direct competitor, and that is one of the worst things that I can possibly say. Because when someone comes to me and they say that we don't have competition, I throw them out of my office. But they're kind of a hybrid, right? Dutchie is a point of sale and a kind of data capture management and inventory. That's a product I'm selling to a dispensary. Weedmaps is effectively an advertising platform. And it's an advertising platform for geolocation and at some level product provision. I think Ease is kind of a comparable for them.
Yeah.
But Ease doesn't advertise every dispensary in a couple mile radius. I think ultimately someone like Amazon or Google is the competitor for them, or someone like Yelp, because if we Googled right now what's the best hot dog near me, that's what's going to come up. And if you bet,
Yeah.
if you Google or Weedmaps, what is the best cannabis near me, that's what's going to come up. So
Yeah.
it's kind of a bit of a unicorn in that
Yeah.
regard. I don't have a pure play comp, and it's even more of a unicorn because give it up to the guys at Silver Spike who pulled this deal off, because when they de-SPAC this thing, I thought they really kind of pulled a rabbit out of the hat. Scott Gordon, I don't know him that well. I think he's super smart. Doug Francis, I've met a couple times. I also think he's pretty smart. So, when they pulled this deal off, I was like, wow. It's one of those deals where I was like, gosh, how did I not do that deal?
Yeah.
But I don't know. It doesn't look good. Doesn't look good.
From a consumer standpoint, have you guys used? Well, you have. I'm assuming you used it before because it's a delivery service as well. But have you used it all, Anthony? What would you? What's your? No, never.
I've never used
Wow.
Weedmaps. I
Wow.
was just going to
Um,
say, Seth nailed it. Their closest competitor is Google Maps. Anytime I go to or even Apple Maps, because anytime I go to a market, I'll just Google dispensaries near me, and bam, they come up on Google. They'll come up on the Apple Maps app on my phone. But no, I've never actually used Weed
But
Maps.
they deliver. Don't they have a delivery service as well?
no, it's provisioned to you through a delivery at the retail.
Gotcha.
So, like, I don't know many retail operators in California that don't advertise on Weedmaps. Like, it's
They all
become
do. Yeah, that's
it's it's
How much
become
were those?
a standard.
How much were those numbers fabricated? Do we know?
Don't know. It's
no.
allegations. Don't know.
Yeah,
Hmm.
empirically, they never stated that.
Seen that too happen too many times in this space, but here we are,
It's easy to do it.
2024.
It's easy to do in tech.
I
I
think
mean, it
what
was
they
just
did. I mean, I think if you drill down, it said that they inflated their monthly active user number.
yeah,
Basically saying that basically they counted in their active users anyone who was redirected to the website, whether or not they took action on the website. So what they did was they said anything who came in top of funnel was a monthly active user, not anyone who actually transacted. And as a
yeah,
result of that, it kind of blew up the numbers or made them look excessively higher. I don't know how many people go on Weedmaps and then actually go down to the provision of product, right? I know a lot
yeah,
of people who will go on Weedmaps and say, okay, I'll just go into the store, or what's the best deal, kind of a thing.
yeah.
So it doesn't sound good.
That doesn't sound good at all.
No.
Well,
No,
keep you updated on that when we hear that story develop more and more. Last thing I wanted to touch on, we're heading to Vegas, and from what I'm seeing and hearing, there's a ton of private side companies that are going to be attending, and all seems euphoria for a lot of companies in this space. But I want to touch on the private side and what you've described as the great white whale might finally happen in 2025, where large private companies will buy out small private companies, meaning brands. So, first off, maybe outline who are the top 2, 3 big private operating companies combined with, say, some of the bigger brands that we could see, like I said, some mergers and acquisitions occurring here in 2025.
Well, in combination with my data partner Hoodie, I have put out a couple of market share reports looking at multi and single state operators. And you have a few which are not public in Jars and Good Day Farm and Cookies and Stizzy and Greenlight and C3 that are all, in the top 10 or,
Yep.
yeah,
or the top 12. So, when you look at somebody like Jars that has 46 doors in 4 states and has 1.2% of aggregate market share, that's $1 billion revenue company that isn't on the radar screen for anybody. So you have a group of multi and single state operators on the private side that are competing with the MSOs. That's not really the group I'm talking about, but I definitely keep an eye on them, right?
yeah,
The group that I'm talking about is just brand. So if I look at someone like Jeter,
Yep.
Wild, Rove, or Kiva, and you look at how much market share they have as a percentage of total sales, They all have somewhere between 1.8 to 1% of aggregate market share. So, Jeter's in 11. Let's just look at Wild. Wild's in 26 states with 4,400 doors and counting. So if I look at their SKU set, it's pretty simple. They sell the same SKU in the same mold in the same box with a different flavor and a different concentration in every state. So if you're in 26 states and you're a north of $150 million revenue company and you're fully penetrated, how are you going to continue to grow? Can you expand into a couple more states with your model? Sure.
So
But,
that's the idea.
well,
So
remember they took a ton of money from Chicago Atlantic. So if I'm basically taking this bottle and I'm
Yep.
filling it in 26 states and all I have is this bottle, can I bring in another SKU like a vape or an
Right.
edible
Right.
or a pre-roll to push through that network, and can I find somebody that's doing 30, 57 million, 70 million revenue to buy? So I think in Jeter, Wild, Rove, Arrow, Kiva, you have 5 companies that are all pretty big, private, definitely north of 150 million in revenue. All of them are in more than 11 states. All of them kind of sell 1 or 2 SKUs and don't have 1 or 2 SKUs that will be pretty obvious. All have raised a decent amount of money. All are, functioning. Are they going to bolt something on strategically to increase revenue 20, 15, 20, 25, 30%? I think this is the year. Aaron Morris from Wild posted something on LinkedIn, effectively saying that about a month ago. So I think this is the year that the mythical white whale that we've been waiting for appears. But I think it's private brand to private brand acquisition or merger. You saw a really good company in Southern California called Mammoth Distribution, which owns the Heavy Hitters brand, do this at the end of last year with Papa and Barclays. Papa was distressed, but they took it over. Papa was a SKU set that fit perfectly into what Mammoth did not have and worked perfectly on the distribution rails that Mammoth does have. So if you own the rails and you're selling one thing and you need to grow, what are you going to do? Gas stations have convenience stores. They don't just sell gas. So
right. So let's channel this in then for viewers watching this that invest in a lot of the pubco companies. That's why they're here. If that does happen, what's the correlation? What's the impact it has on investors that are investing in this space?
Well, if you want to play it, I think, and I'm not tooting their horns, but I think AFC Gamma and Chicago Atlantic both have publicly traded kind of equity REITs that you can buy into that own some or pieces of these assets that you can look at. I think for the public equity investor, it just means that the thesis that this industry is growing and you're going to look at things that compete with MSOs, is real, right?
Yeah.
Very real.
In every other industry, you have strategic to strategic. Right? You have financial to strategic. You haven't really seen a big wave of strategic to strategic. So if you now have 5 or 6 destroyers that are sitting on the coast of, a geography, and they're all armed and the tension's getting hot, it's like, when's China eventually going to raid Taiwan, right? When's one of these companies going to pull the trigger on a deal? I think this is going to be the year, because when I look at how much penetration someone like an Arrow or someone like a Wild has, and how kind of disciplined they've been in their SKUs, putting something on top of that is probably the way that they're going to have to grow. And I think what it means for the public guys are that look for the people that are going to make those same catalyst decisions. I think if I'm sitting in, so you saw what Ben Kovler did at GTI. He basically did it by buying a public shell and creating essentially a second division to go create a new product set for himself. If I'm sitting inside of some of these distressed assets or some of these assets that we talk about, that need a catalyst like Ascend or AYR or Verano or TerraSend, look for these guys to make moves because they're all competing for the same limited number of pies. And I think if one of these things happen, you might see more. A lot of these private companies throw off a lot of cash flow. I haven't ever talked publicly on this program about a group out of Arizona called Timeless. But
Timeless are great.
Timeless is in 8 or 9 states. It's privately held. It's formed by four guys, zero outside capital, wildly profitable.
Yeah.
One of the number one selling vape SKUs in the United States, bar none. That's a baby destroyer, and they are people who I am very very close to, and someone that I hold out as looking to potentially make a move, or someone who, if I'm an MSO, why am I not buying them? Right. So I think you're going to see things happen.
But Seth, if you're one of those operators, don't you hold out for, let's say, private equity? Why would you want to get involved with, let's say, some of the MSOs that have baggage and that have these these public market problems? If I'm a company like Timeless,
Exactly.
I'm waiting for private equity to come in, clean exit, and just get out. Same with a lot of these other private companies. Real money, like real private equity, is going to come into this space if and when we see the regulatory stuff actually move.
Have you been listening to every conversation that I had over the weekend? Because while we are talking and broadcasting this live, these are the conversations that I'm going to be having while I am in Vegas, right? Yeah. So it's a matter of
it's a tale of two tapes, public and private side, is it not? It's just
it is for someone like a Timeless, okay. They're in an extremely enviable position because they don't have to do anything. Yeah. So if you don't have to do anything in cannabis, you continue to execute your business plan. Look, the guys we've talked about, Jeter, Wild, Rove, Kiva, they don't have to do anything. But if you're at that point, eventually timestamp it, prognostication. Eventually someone is going to build a $500 million house of brands in cannabis. It is inevitable. And one of these 5 or 6 companies that I'm talking about has the capability, the cash. They might need some help, so call your boy to put it together. But somebody's going to do it. And whoever does that, that's going to be the thing that gets taken out by private equity. And that's going to be the thing that someone that's a Dr. Pepper Keurig is going to step in and say, that's what I want to buy.
Correct.
Well, be interesting to see how it all breaks out. But more importantly, be interesting to see you in Sin City, Las Vegas. Safe travels. Look forward to seeing you when we are there later this week. And should be fun. I'll get you, you want a white or green hoodie?
I look better in dark colors, so let's do green. The camera adds 10 pounds, so whatever we can do to make it look better here.
All right, my friend. The man with the bead, Seth Yakatan. Good to see you, sir. Enjoy the rest of your afternoon, and we'll catch back up with you next week, okay?
Thank you, gentlemen. Appreciate the opportunity. Talk to you soon.
Right. Thanks, Seth. Hey, everyone. Thanks for watching our latest podcast. What'd you all think? Is there any information that we're missing? Is there anything you want us to cover? As these industries heat up, we're getting access to more and more big hosts. So let us know the questions that you want us to ask for you. As usual, smash that like button. We want this to go viral. Click on that bell for all notifications for the latest interviews that we're doing. And as usual, let's build this community. Subscribe to our channel because we appreciate it, because we wouldn't be here without you. Thanks for watching, everyone.